Hey guys, welcome back. Today we're going to look at your New Zealand JPY. I know the JPY crosses have kind of confused quite a lot of folks. Last year it made a lot of folks a lot of money. Um, all right, let's look at the monthly chart, see what it's actually saying. All right, I haven't actually spent too much time on this pair. Oh, let's change the color of this, sorry. There we go, and black. There we go. Roughly around here. Okay, so we have quite a lot of resistance around this area, and it's broken above. I don't think it's gone anything higher than this peak right here. No, it hasn't. But we need to make sure that we're understanding what the market's saying. Okay, so obviously currently in a down move, and it's come up to roughly around just shy of a 786. There's nothing saying it's in a down move at the moment. It's showing that it's up. Let's do some fibs so we can have an idea of what that means for us. Here we go, A to B, C. Okay. Okay, so it looks like it's still heading up. It might, if it's still going up, we're expecting potentially that it'll have some resistance around that 2.7, mainly because it hasn't actually come down really to a 382. I think it just about touched it actually. But the down moves, the down candlesticks formations don't seem to be holding very well. This engulfing bearish, this sort of dark cloud coverish here didn't hold for very long. Came back up. Tried it again, pushed back down. The candlestick formation failed. Went back up again. It's given a bullish candlestick formation, no bearish candlestick formation at this moment. So it's difficult to say what anyone should do with this pair at the moment. Okay. The one thing we do know is that it's in a downtrend on the bigger time frame. As to what that means, it's difficult to say at the moment. I haven't actually marked these, so let me just do this. The reason I haven't marked it is because it hasn't actually hit anything. Okay, that's why I haven't marked it. But if we had to mark our little sub ABs, here's a little sub AB heading up, and there's nothing much of a down AB to mark down. So I know potentially this trade might come up to an 8.6. More than likely when it does that, you have more chance of that A failing, but until the A is taken out, the trend is still valid, so it is in a downtrend. Okay. Okay, cool. Alrighty. Let's blow this up on the weekly. On the weekly, we have this candlestick formation. Oops. We have this trend. Here we go, A. There's our B down here. And we, oops, somewhere around here. Let's just minimize this. Okay, we are currently shy of a 786. But we have an uptrend. All right, so let's blow up this uptrend to see what it's actually saying to us as traders, and get sort of a good understanding of what that of delivery, you know, and what on expectations, and so we can manage our expectations with this trade if we know generally or you know the direction it's meant to go. And so it'll better equipped our eyes to see potential trades that we could capitalize on. Okay. All right, our first AB, A to B. Oops, C daisy. C, and our D is up here. All right, and our D is up here. All right, let's draw next AB fibs. All right, A to B, A to B, and we are at the 2-7. The market is showing signs of reversal, in that it has just about broken a counter trend line on there. So let's see, we're expecting this market to go down into the AB boundary. Does that make any sense, guys? Are we clear on that? Oopsie daisy, wrong one. Oops, still wrong one. Cancel. There we go. Oh, heavy fingers, I tell you. There we go. Use A to B, and we've hit a D here, and that's our A to B. So worst comes to worst, we're at a 382, but we're expecting this market. We've hit a D. We've hit a D. We've hit this D right here, and the market's pulling back. Now, because it's hit a 2-7 and breaking this in a trend line, I'm expecting this market to shoot down at least back to a 382. So we have potential for this trade of roughly around 1700 pips. Okay, so let's go to a daily. See what this actually means for us. All right. A to B. Alrighty. All right. No, there's no 2. I think that's our next one. There's 1. Yeah, 1 to the left. No, it's not 2. Okay, great. A to B. C to D. A to B. And C to D. Alright, let's just start marking them up. A to B, oopsie daisy, C to D, great. And moving on swiftly, there we go. We had a shallow bounce and then it shot all the way up. What's our next high? It's right up here. Alrighty. And here's our A to B. Oops. A to B, A to B. And our C to D. And another shallow bounce, C to D. And our D is all the way up here. Okay. A to B, C to D, A to B, C to D. That's our next D. And let's do our next fibs. Looks like the market almost close enough as taking out our AB. Let's delve in a little bit more to see that that's actually the case. No, it hasn't actually broken. Okay, so we're at an 8.6. Deep retracement. This is our D hit. Okay, so we're still in our AB. All right, let's crack on. Still in our AB, and we're going A to B, C to D. Okay, A to B, and C to D. Okay. All right. So on the daily, it's showing that we're making small moves, small waves, heading down to at least the 382. You can tell you might get a little bit of resistance around here. You got a little bit of resistance here. There's a little bit of resistance expected here. But the 382. Here's our 382. If I were trading this on a bigger chart, I wouldn't trade this, mainly because for me risk reward is not beneficial. It's not showing that. It's not giving me any incentive to actually get in. Okay. All right. Let's just delete all these. Okay. And this is our AB on that daily. Oopsie daisy. Oh, this is becoming fun. There we go. Hold the phone. And my chart has moved. I apologize. There we go. Alright, now let's draw this back in. There we go. And draw our fib. A to B. No, I missed it still. Oh, guys, I really apologize for this. Sometimes the charts play tricks on me. Okay, so if we blow this up and we did some tiny counter trend Gottlieb type fibs, we could see the market is down, hit a D on that Gottlieb, which we're expecting it now to head up. And head up to at least 382, which works out to about, from here, works out to about 92 pips. Okay, so we have an opportunity that we can potentially take care of, but let's see how that works out on our chart. Okay. A to B, C to D, A to B, C to D, A to B, C to D. I think if you say this enough around your toddler, they'll definitely know the ABCDs. Okay, I thought it was funny. A to B, oops. C to D, A to B, C to D, A to B, C to D. The unfortunate side of that is that they might never learn anything past D. Be asking you, mommy or daddy, what's after B? What's after D? And then, you get an incentive then to spend more time with them, teaching them the ABCDs. Okay. Alrighty. A to B, C to D, because it's taken out at A, as you can see. C and D is down here. Okay. And so we're going A to B, C to D. Alright, let's mark this up. A to B, C to D. Alright. And so we're in an AD boundary on that 120. Came and was shy of the 50. Came back into near enough the 27, actually the 118. And so we're expecting this pair to go higher up. I wouldn't trade this until it gets to around a 618 retracement, which would be a potential trade. But because let's see how many pips that is to the north, which will make sure it validates with yeah. So we're expecting a 92 pip-ish move on the daily. 144 works just about the same with this pair. So I would do a sell trade on this, getting in at the 618, and looking for small Gottliebs